Hey everybody, welcome to Mortgage Today for Monday, December 18th, 2023, and oh, what a day it was. UMBS were down 11 basis points in the morning. Bonds were almost perfectly flat overnight, with 10s trading in a narrow range between 3.89 and 3.93. The first discernible move of the day arrived just after 8:45 a.m. Eastern Time. While this coincided with comments from the Fed's Goolsbee, correlation is not causality. In the morning, U.S. stock futures ticked higher, even as central bankers sought to sow doubts that aggressive interest rate cuts will materialize earlier this year. European Central Bank Governing Council member Bostjan Vasle joined a chorus of officials tempering market optimism about rate cuts. His cautious tone came after New York Fed President John Williams last week said bets on a March reduction were premature, and ECB President Christine Lagarde said the bank had not discussed cuts at all. For now, market optimism remains resilient. We had a lot of Fed speak from FOMC meeting, which seems to pour cold water on the narrative that rate cuts are coming quickly and aggressively. It seems like the Fed is worried that the markets are over their skis with the respect to rate cuts. On Friday, like we said, Fed President John Williams said, "We aren't really talking about rate cuts right now." Fed members Goolsbee and Meester spent the morning walking back the Fed rhetoric from last week, saying the market is just getting ahead of itself, especially on rate cuts. Chicago Fed President Austin Goolsbee said that he was confused at the market reaction to the FOMC forecast. Atlanta Fed President Raphael Bostic sees rate cuts beginning in the third quarter of 2024. The Fed's favored inflation measure, the PCE core, expected to come in at 3.3% annualized pace, down 0.2% from the previous month. While 3.3 remains quite a ways from the central bank's target of 2%, it is also quite a ways from the 5.6 local high seen in February of 2022. The markets are moving things and are counting on about 6 rate cuts by the end of 2024, which seems ridiculous. Just 6 weeks ago, the expectations were for just 3. Through the 3 p.m. CME close, today's trading volume in longer-term treasuries was the lowest in months and one of the lowest non-holiday of the year. There were several Fed speakers making the rounds, and several of their comments seemed like the sort of thing that might get the market's attention, but there's no discernible reaction. Bonds began the day sideways, lost some ground early in the session for unknown reasons. Could be Europe, could be oil prices, could be year-end positioning, or it could be those Fed comments. Stayed almost perfectly flat the rest of the day. There will be more economic data as the week progresses, but fewer traders left in the office to react to it. So the UMBS 6.0 closed up 5 basis points. The 5.5 coupon lost 5 basis points. That puts the 6.0 at 101.44. So at 101.44 puts us right in this middle of this very narrow range, bordered by a couple of Fibonacci lines, and it's starting to drag that 25-day moving average up, but we're well above the 200-day moving average. In other news across the industry, Mr. Cooper's Halloween cyber attack trick turned into a $25 million treat for vendor services and identity protection. Initially pegged at $5 to $10 million, the breach exposed data from substantially all of its 4.3 million customers. The company is offering complimentary identity protection and monitoring for 2 years.